Good day, people. Welcome to Crypto News. I'm Anelia, your host today. On this channel, we will keep you updated with the most important and recent news about the crypto market. If you're interested and want to make the most money out of this market, make sure to subscribe and hit the notification bell. So today let's go through some interesting news, starting with the big Telegram's user sales and the Genesis $1.8 billion loan. Then we will move to a few FTX revelation and the fall of Who Exchange. Later, let's take a look at the huge dump of BNX token and the second layoff spree of Bybit. Despite the FTX contagion, new projects are still coming to the industry, and one of the most prominent names is Telegram, the most used messaging app in the crypto industry. So last month, Telegram allowed users to buy usernames for its app via a blockchain-based platform called Fragment. So the platform lets interested parties buy available usernames and secure ownership on the open network blockchain, also known as Tone. When buying a name, users pay with the Tone cryptocurrency. In the last 4 weeks, Fragment sales surpassed $50 million. Some usernames have brought in large sum of money for Fragment. For example, the username @news was auctioned for 994,000 ton, which is about $1.8 million. Telegram CEO Pavel Durov said that in the future, Fragment would expand beyond usernames and build a host of blockchain tools for Telegram, including crypto wallets and decentralized exchanges. He suggested that users may access such services from within the Telegram app. Well, another big player has joined the game, and it is absolutely no joke. Telegram currently has 700 million monthly active users, and we bet more than a half must be crypto enthusiasts. They literally acquire hundreds of millions of users already. So, should we make any investment on Telegram? Tell us in the comment section below after you finish this video. CoinDesk on Sunday reported that up to $1.8 billion would be stuck on trading and lending platform Genesis, and this number can continue to grow. As mentioned in the previous video, crypto broker Genesis and its parent company, Digital Currency Group (DCG), owe customers of Gemini $900 million. Gemini, which runs a crypto lending product in partnership with Genesis, has now formed a creditor committee to get back the funds from Genesis and its parent DCG. Today, CoinDesk revealed 2 other groups of Genesis creditors. The second group of Genesis creditors with loan around amounting to $900 million. The third special group of creditors is represented by the law firm Kirkland & Ellis. However, the amount of this loan is not known. As reported, the lending arm of DCG has halted deposit and withdrawal since November the 16th because of an exposure of $175 million to FTX. Immediately, Genesis has aggressively raised new capital as well as convinced creditors during the past month. Although parent company DCG has poured $140 million to rescue, the current situation is not much better. So, do you think that Genesis will go bankrupt? It's been a month, but the revelation about the FTX scandal keep coming and shocking the crypto market. CoinDesk recently cited that Alameda Research once had to shoulder an FTX loss of up to $1 billion following the client's leverage trade in 2021. In early 2021, a client placed a leveraged bet on MobileCoin, a small token used for payments in the messaging app Signal. The bet suddenly caused the token to spike to almost $70 from $6, exposing some weaknesses in FTX's financial buffer. The trader used the position to borrow against it on FTX, which could have allowed them to extract dollars from the exchange. Alameda had to step in to assume the trader's position to protect FTX liquidity. The exchange has lost hundreds of millions and could have lost $1 billion. The loss has revealed a weak position of FTX, which is a foreshadowing for the fall of the exchange last month. Another centralized crypto exchange, Who, has gone under, bowing to the storm of FTX collapse. However, the death of Who seems like not only a normal bankruptcy but also an exit scam. Earlier on Monday, a tweet revealed that Who Exchange has deleted its website after several months of inactivity since July. Consequently, the latest development has distressed their users. Some said they couldn't access their accounts while others asked for refunds. So what are the reasons behind this? The doom for Who started in June 2022 after Terra collapsed, which led the platform to suspend withdrawals in sudden. Who also launched a debt-to-token project for its users. However, Who dropped the project without any notice or explanation. Afterward, a local news source reported a dispute between the executive members of the exchange. Rexy Wang accused Feng Wenbin, an executive, of stealing the company's information and assets. In response, Feng claimed Wang refused to pay his staff and moved most of the firm's assets to a private wallet. Finally, victims have lodged complaints against Rexy Wang at the local police station and is currently on the wanted list. It's not that hard to detect some classic sign of fraud here, so yes, it's maybe another exit scam following the FTX. And before the authorities says anything, users like us has better watch out when depositing money on any exchange. The wave of layoffs in the crypto exchanges continue to spread. Most recently, Kraken Exchange laid off more than 1,100 employees. And today, cryptocurrency exchange Bybit announced a second round of layoffs in 2022. Bybit has stated they will cut 30% of its total staff for ongoing reorganization of the business. Explaining the decisions, he said it's important to ensure Bybit has the right structure and resources in place to navigate the market slowdown and is nimble enough to seize the many opportunities ahead. As you can see, many platforms have to file for bankruptcy following the announcement of personnel reduction. The founder of Binance, CG, also tweeted to advise users to be wary of personnel reduction platform. So, always be careful and keep yourself updated. Another shocking news is that BinaryX, a fantasy role-playing game project backed by Binance Labs, has been heavily dumped following a wave of token sales. According to Look on Chain, on December the 3rd, there were 3 wallet addresses that withdrew the BNX to BUSD pool on PancakeSwap and transferred more than 15 million BNX to Binance for sale. This sale caused BNX to plunge from $125 to $93 and caused panic around retail investors. Especially, transaction time and movements of these 3 addresses are very similar, so are they owned by one person? There were also rumors that the project was selling BNX tokens that made the community angry. They asked BinaryX to report the incident and publicly verify the wallet address. The developers tweeted that they would buy back the tokens soon and are working on a detailed plan to calm down users. However, they did not reveal the rate at which the tokens would be repurchased. Just a warning for uneasy belief. In fact, projects listed on Binance Labs are often appreciated by Binance's careful selection. However, let's carefully look into projects by yourself before deciding to invest in them. So, that's the end of the video today. What do you think? Comment down below for your thoughts and don't forget to subscribe and hit the notification bell if you are interested for more updated news about the crypto industry. I'm Anelia. Enjoy your day. Goodbye.